I mean, you haven't dealt with us. That's why you found it so difficult to raise money. So we're a relationship lender. So I just think it's a current environment in terms of that has many different factors affecting it. The product that is coming online in the residential and the hospitality. You see that throughout the Northeast, from Miami up to Boston, and you see a San Francisco market that is booming right now, and you go down to the West Coast as well. So that has a factor, and also the political instability. So that's why I think you've seen kind of like dryness in the market, and of course you have a dealt with this.
Let's see.
But stronger markets, Brazilians and Venezuelans came very strongly in Miami. And we saw that when you underwrite all of the construction for luxury condominiums coming into the market there, in which they're securing 50% of the deposits, and from the roster of buyers that they're having, you can probably allocate 75 to 80%, and you guys probably know those numbers better than I am, to Latin American families coming in. So it's a different feel than the Asian money. An impact that I would probably say that has affected Latin American buyers is the full disclosure in terms of where your funds are coming due to the money laundering issues that they've been facing.
That was the recent article.
Correct, and not only especially affecting Miami, because you could come in and buy through LCs and allocate millions of dollars without disclosing where the money was coming from, and that had an impact directly with governmental corruption in places like Mexico, Venezuela, Colombia, etc. But that has been a factor that could probably potentially slow down a little bit. But other than that, Latin American market is a very strong market for the U.S. in my opinion. The new concept of, I would say, the WeWork concept within this developers, like you amenitize fully your building, you create more a community. That's been a trend in San Francisco. Doesn't need to say that it's been that's inexpensive at this current time in this stage of the cycle. It was very attractive. We've seen a couple of deals about a year ago in which the bases are very interesting. Portland is another great market in which they grew the community in terms of kind of like urbanize certain areas that were deprived of any new real estate, and they create more for the millennials, a more kind of like an urban feel, and unemployment was crazy high, and they created these communities that brought in real estate development and brought in a way of life. Seattle is another very interesting market. Now, what is happening on the West Coast is that kind of like the West Coast lags from the East Coast in a way. Now you're seeing prices and valuation getting up to the levels that we're not comfortable seeing anymore, and per your last dollar exposure on the debt. But very interesting markets. And my name is Roxana Girand. I'm the founder and owner of Sebastian Capital. We are an innovative boutique real estate firm that specializes in Latin American families that have assets in the U.S. We do a variety of things as management, leasing, and on the lending platform, we work with a foreign bank institution, mainly focusing on land acquisition, bridge financing, and construction in assets in the U.S. Thus far, probably over the last, since 2015, we probably allocated about $500 million in debt financing to developers here in the U.S.
Wonderful.